Good afternoon and welcome to GrainTV. It's January 4th, 2013. I'm Logan Burgess. To my right here is Brock Shimona. Well, Brock, let's jump into fire tip. See how the grains ended here on a Friday afternoon. Guys, please keep in mind, if you want to take a look at this platform for yourself, visit us over at grainhedge.com. You know, Brock, a lot of red on the board here. March corn down 9 1/4, soybeans off 21 for the March delivery, and Chicago wheat backing off 6 3/4. Just another day of selling here in the grain market.
Yeah, we continue to see this, especially this week. You know, export sales did come out this morning. They were slightly positive for soybeans initially, right, but as the day session opened up, we really saw a sell-off pretty sharply. We broke through a couple of key technical support areas, so that's some things we're going to have to watch as we move forward here. But let's take a look at what soybean export sales are actually looking like for this year. If you take a look at this red line here, that's what we should be seeing for weekly export sales to meet current USDA expectations. The blue bars are what we actually are experiencing. So we did come in just a little bit above expectations this week, and we continue to run well ahead of pace to meet current USDA expectations by 184 million bushels ahead of that pace to meet current projections. If we take a look at corn, over there we can see that we're quite a bit behind what we need to do to meet current USDA expectations. We're about 53 million bushels behind that pace, and we fell another 5 million bushels this week alone. So this story continues as we've seen all marketing year long. Soybean sales are pretty good. Corn sales continue to be pretty weak.
Yeah, Brock, you know, as we look toward next Friday's USDA WASDE report, I don't think it's out of the question to expect a 25 million bushel decrease in expected corn sales here for the marketing year, and a 50 million bushel increase by the USDA for soybeans in expected export sales, you know, here moving forward. We'll kind of be breaking these numbers, though, down in detail next week. Obviously, that's going to really dominate the trade and trade talk all throughout next week. But certainly with the pace that we're on right now, I think that something has to be done to make the balance sheet even out here in the end, given the pace of export sales we've seen. You know, one other thing that we did get out today was EIA ethanol production. As you can see here, another ethanol production figure that did miss the mark. If we take a look here, the red bars are weekly production in terms of barrels per day. You know, we did have a holiday shortened week, but at the same time, Brock, right now the margins simply aren't in this ethanol market. We're seeing them about 97 cents a barrel. That's off, or excuse me, 97 cents a bushel. That's off about 3 cents from last week where it was. So there's really not the incentive for ethanol production right now. If we take a look at corn going to ethanol, our models suggest that right now corn use for ethanol is going to come in about 100 million bushels short of what the USDA currently has projected, which is 4.5 billion bushels. Obviously, that's another category that could see a revision out of next Friday's report.
You know, it seemed like today we just got a slew of bearish fundamental information, especially in the corn market. We saw weekly export sales be very weak again. We saw ethanol numbers be down again. We had Informa come out and say, or estimate that next week's USDA production figures for corn are going to be higher by 1 bushel per acre on the yield. Production overall is going to be a little bit higher. Soybean going to be a little bit higher as well in production. So it just seemed like there was a lot of fundamental bearish news weighing on these markets, and we really saw it take hold in mid-session today.
Yeah, you know, that happened as well for beans today as well. I know I was talking to you. Beans did get a little bit of a bump up here with that export sales number, but we traded down to an area that's clearly critical right now for this bean market. That's the price level of 13.56 here on the March contract. And if we take a look here at a daily chart, back in November we traded down right here. 13.56 was the low. Today, to the tick, we traded down, hit 13.56, and found support. So I think right now for guys watching this bean market, this is going to be very important for direction. If we're able to close below there, especially a strong close below there, if we zoom out, it's really going to be clear that this market is now making lower highs followed by lower lows. And I think people are going to really look for that production out of South America to start to weigh on this market, as it has been in the recent weeks. What are the bulls going to say? The bulls are going to point to the fact that right now fundamentally soybeans are much stronger than corn. We see export sales, you know, again this week outpacing trade expectations, and the crush from last month was pretty strong there as well. So fundamentally it remains stronger than corn, but right now I think the bears seem firmly in control of this bean market.
Yeah, I agree with you, and you know, I do think we will see some sort of revision higher for the export sales in next week's report. Right. But we're going to have to examine the balance sheets as we head into next Friday's report a little bit closer here, and we'll be doing that all week here on GrainTV.
Yeah, guys, well, thanks a lot for joining us here on Friday afternoon. Everyone have a great weekend out there. We'll see you back here on Monday.